Hi everyone, it's David and welcome back to Safer FX. On the screen tonight, during New York, Monday the 29th of September 2025, we've got the Aussie US dollar. Just posting this one now to indicate potential return to the long side for the Aussie after a decent run about a fortnight ago in the same direction. This is pretty quick. It's down on 5-minute money. As you can see, what I'm calling here is a bit of a consolidation area or a contraction in price. During London, it's moved either side, and then the later half of New York, it's bounced either side of what I'm calling about 5 or 15-minute value, which is at 65,670. So a black candle closing down through that price would indicate to me that it's indeed not the commencement of any sort of long trend of any significance. However, just as we're talking now, it's moving higher reasonably convincingly, passing through areas of trading that it seemed to be accumulating on, as I say, during London specifically, and also the later half of New York. So she's moving higher, but just to give you a bit of a context, I'll jump all the way out to the daily and then zoom right in for you. So 2-3 weeks ago, starting on the 22nd of, when was that? Was that back in August? Yeah, back on August. So Aussie, had a reasonable run up. Last week, pretty much spent the week coming off. Each of these green lines indicating that the daily was more inclined to be going short than long. And then this orange line at the bottom is actually weekly price inefficiency. So just to really quickly knock that one out for you. So this is now weekly. It's a week-long trend. And I wouldn't call it a trend in terms of it being long. It's more just a directional bias at the moment, more to the long side than the short side. Very tenuous at this point in time. However, I wouldn't be shorting the Aussie. I'm looking for long opportunities. So if I just jump back into the daily, it could well be that this may be an indication of a move that could just end up going to the long side. Now, that being said, my risk has been zero. But it is tenuous. If I drop back down to the 4-hour, drop back down to the 1 hour, you can start to probably see why I'm indicating that, albeit it is breaking higher as this recording is going along. The stop loss is obviously very, very close to the price action. So the move is going to need to be strong in order for this one to survive, because it could, just fail during the Asian Open tomorrow morning and then shoot back down and the stop will be taken out, which is all fine and well and good. I'm not particularly worried about that. Just jump out, back down to the 5-minute. So back down to the 5-minute, as I said, I managed to pick up a couple of positions below what I'm calling as 5-minute value, maybe 15-minute, but more likely 5-minute value, which of course is extremely volatile and it could come down and pass back through them. But I'm essentially saying this is now a zero risk trade, and ultimately what I'm looking for is a move back up on an intraday basis. So if this one holds, the risk return ratio on this one will be quite high, and it would turn out to be a pretty decent sort of a trade. So I'll just leave that at 5 minutes. As you say, it's really kicking off now. So if I just indicate, so for me, green means trending. So trending on 5-minute, I'm pretty happy to call that. This was the consolidation or the expansion, the expansion phase where it was moving backwards and forwards, picking up liquidity for the long side, and the blue's the consolidation area, the black line, which is 65,670. That was my sort of balance price during the end of London and the New York session, and now she's moving higher. So we'll just hold this one, see where it can possibly go, but it's now a zero risk position. If you're enjoying this content, getting something out of it, want to ask a question, please comment below. If not, I'd really appreciate it if you'd like, then consider subscribing, because that'll help others get the word out there. And I'll trade safe, and I'll catch you in the next one.